Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Before we start the show, let's focus on earnings. And the number that will be reported today will be state to refiner HPCL, and it's expected to report a muted quarter on the back of rising crude prices. Sumit Sarkar is standing by with what the street is pricing in. Sumit, what can we expect from HPCL?
So, Darshan, if you see the headline numbers for HPCL compared to last quarter, the revenue is expected to be higher by nearly 8% to close to 72,800 crore rupees, while the EBITDA that is expected to fall nearly 13% to close to 2,700 crore rupees. Margins now that are expected to contract nearly 3.8%, while net profit is expected to fall 13% to close to 1,500 crore rupees. Now, the gross refining margin, that is the key number for the oil marketing company, that is expected to come in at around $5.58 per barrel versus $7.15 per barrel reported by the company in the last quarter. Now, the GRMs are expected to fall because of lower inventory gains. Now, inventory gains are expected to be lower in this quarter because of a relatively lower hike in crude oil prices. Now, if you see the Brent crude, now that averaged only 1% higher in the second quarter compared to first quarter, as compared to a 12% hike seen in the first quarter, and that's the reason why the inventory gains for HPCL are expected to be lower compared to last quarter. Now, on the marketing side, if you see, the fuel margins were quite steady throughout the second quarter, and that's the reason the marketing segment is expected to be steady for the oil marketing company. Now, the gross marketing margin earned on sale of every liter of petrol, now that averaged around 1.6 rupees per liter, while on diesel it averaged around 2.2 rupees per liter for HPCL. Now, on the operational side, if you see the crude throughput, now that is expected to be higher by around 4%, while the sales are expected to be down by nearly 3% to 9.4 million metric tons. Now, sales are expected to be down because of a seasonal weakness that we see in the second quarter of financial year 2019. Lastly, key things to watch out for, now that would include the company's crude sourcing strategy amid the Iran embargo and decline in Venezuela crude production, and also company management update on the Visakhapatnam refinery expansion project and guidance on the future capital expenditure would be keen thing to watch out for from the HPCL earnings.
Okay, Sumit, thank you so much. We'll certainly watch out when HPCL report its numbers today. But let's welcome our experts then. Avinash Gorakshakar of Joindre Capital and independent market expert Shahina Mukadam join me on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss the L&T numbers and the Vedanta numbers. Cummins came out with a strong set of numbers. The commentary was very, very strong. Will the rally continue? And since large caps have again started firing, we ask our guest which is the top large cap bet that they are betting on at this point of time. But first, let's start with L&T. A pretty strong set of numbers. They maintain the guidance, and in all cases, they will go beyond the guidance. The counter's up 5%. Most of the sectors did well, and even in the verticals that didn't do well, they showed an improving margin. So on all parameters, L&T was a big beat. But what's the way ahead for L&T, and how did our guest find the numbers? We'll ask them. So Avinash, I'll start with you. What did you make of L&T's numbers?
I think Darshan, numbers were definitely much better than our expectations and broadly the street expectation, especially in terms of the top line growth as well as the order inflow. I think order inflow has been definitely much better than what the street expected, and I think in terms of the guidance also, the numbers were largely in line. 10 to 12% growth on the order book inflow and 10 to 15% growth on the top line. I think clearly the second half is a period where we expect faster execution, and hopefully if these numbers are also exceeded, it won't be a surprise, considering the fact that except for maybe the international business, the power and the infra business has actually shown a good inflow of orders. So all said and done, even at the current order levels, definitely one could look at it as a good portfolio pick.
Okay, but did you find the other, because what the trend we've seen is that a lot of capital goods company came out with strong set of numbers. ABB first reported, then you had in the defense space also you had Bharat Electronics, and Cummins came out with strong set of numbers. Is that trend turning for capital goods companies?
I think it looks like, Darshan, clearly companies like Bharat Electronics, or for that reason ABB, L&T, I think numbers have definitely been very encouraging. To get a really realistic feel, I would believe that maybe one more quarter of sustained growth, and that would be a clear signal that manufacturing companies, especially the capital goods companies, are definitely on an uptrend, and you could see a good amount of rebound even from these levels. I mean, clearly these companies have underperformed for a long time, and execution has been a key area of concern. So looks like definitely the uptrend has started.
Okay, what about you? What did you make of the numbers, Shahina?
I totally agree. The numbers were very good. And as Avinash was pointing out, the order book also growth was good. It was in line with expectations. I wouldn't say expectations were not there, but also in terms of guidance, they have maintained the guidance. So to that extent, I was expecting them to up the guidance because of the numbers, very strong numbers. They didn't. At the same time, I believe it should be better. What came out in the con call was they have got good orders from NTPC, and there is a specific demand that is upcoming from a lot of power sector companies, oil and gas companies, because of the change in norms with the pollution control becoming stricter. The CO2 levels have to be better managed. So I think to that extent, the 500-600 crore order that they got from NTPC, the company expects, the management expects this to come in from much more, from many more such orders from NTPC and other companies in the oil and gas segment also. So I think the overall order book position, both in the domestic as well as in the international markets, which almost contributed about 20%, international market order book growth. So I think to that extent it is a positive, and I think from current levels the stock has a lot of support going forward, even because of the open offer that is there. So it's a good addition to the portfolio.
Yeah. So my only concern here is that the management has said that orders will be front-ended, everything will be front-ended. So even on the first quarter, the end of the first quarter, they had said because they expect second quarter there will be uncertainty. Now is there an issue where because of elections that could come in and because of the base also becoming higher, that the second half could be somewhat of weakness that could come in for L&T? Probably that could be the reason they didn't up the guidance.
Yeah, that is what they're saying, but they're saying two things. On one hand, that is precisely what the management said, while maintaining the guidance at same levels and not upping it. On the other hand, they have alluded to the fact that there is a change that is happening and there's a lot of demand. They give the example of NTPC, the 500-600 crore of order, and they've given that example saying we are expecting many more such orders, and also from the oil and gas because of certain pollution control norms that they have to meet. So they're alluding to a bigger inflow of orders, also with stabilization of GST, in the last year, the base being lower. The expectation is that the number will be better. But let us go with what the management says, and I think 10 to 12% also increase in order book is not bad, and it also shows it reflects the increasing revenue growth that we're seeing on a year-on-year basis. Like if last year it was 20-21% overall revenue growth, this year would be better, and the next year is expected to be still better. So most analysts on the street have upped their estimates, and I would go with that analysis and believe that in terms of current valuation, it offers decent, it's a decent bet. It has not performed in the last couple of months. So going forward, it would be one stock you can have in your portfolio if you're betting on infra.
Okay, do you think second half probably will be a little stretch for capital goods company, given that elections could come in any time? There's no specific date, but if the model code of conduct comes in, there will be a blanket.
I think there could be definitely be a little letdown in fresh orders, Darshan, if immediately fresh elections are announced. I would believe that maybe the Jan to March quarter is a quarter where possibly fresh order inflows could possibly be impacted, but nevertheless, as the management hinted, that on average a 10 to 12% order book inflow guidance is something which is quite reasonably expected from the company. I would believe that if at all the elections are announced, one could see a little bit of slackness in fresh order inflows in the fourth quarter, but nevertheless these are events which are not predictable. I would believe that on a normal basis a 10 to 12% growth should have been higher, considering the kind of growth they have shown in the second quarter. Let's wait and watch.
Okay, and we asked you L&T, but what's your top pick in the capital goods space as such? Capital infra, we can combine both.
I would believe that Darshan, clearly stocks like ABB, or for that reason even a Thermax, I would believe that these are purely capital goods industrial growth companies, and hopefully if the cycle turns, then you're going to see a lot of action in these companies. Mind you, Thermax also has a very strong balance sheet, virtually no debt on the balance sheet. Working capital has also been managed quite well. So I would prefer to stick with these stocks which have actually underperformed for a long time, but which have the potential to outperform, hopefully, if the trend changes.
Okay, so that's the view that's coming in on L&T. Then the other company that came out with the numbers was Vedanta, and Vedanta managed to disappoint, but obviously there was a special dividend that was given that has actually cushioned the fall on Vedanta this time around, but somehow commodity prices have come off significantly, oil prices have come off significantly. So will the next few quarters be troublesome for Vedanta? We'll ask our guest. Firstly, Shahina, your view on Vedanta. What did you make of the numbers?
See, I personally hold the stock, and the stock has been quite a bit of disappointment if you were holding it from, say, the 300 type of levels. So it has corrected a lot if you see it in the last couple of months. And yes, the dividends have been there. You know, the one-time dividends have been there, but it is not compensated for the loss of investor shareholder value that we've seen in the last couple of months. And this is because I believe this is a reflection of what the numbers they have reported, a 34% dip. And I think they are being impacted by the zinc prices, the weakness in zinc prices, and the exposure to the zinc through Hindustan Zinc. At the same time, I think if you look at the overall balance sheet quality, despite the poor numbers, they have slightly brought down the debt by around 3,500, 4,000 crores. So to that extent, there is a work towards improving the balance sheet quality. So all in all, I think while the numbers have been poor, maybe the worst is behind them, because they've had a lot of issues, including the copper smelter. So a lot of issues in the last couple of months is reflected in the current.
Why do you say worst is over? Because again, commodity prices are cooling off, crude is cooling off, and they are the business line. So I just wanted your reasoning why you feel the worst is
yeah, because if you see on if you see at the current levels, while yes, crude is cooling off if you see it on a month-over-month basis, but if you see on a YOY basis, we are still much stronger. So I think that segment is going to be a good positive for the company. Also, they have been recently allocated more blocks. So I think to that extent, the investments in that particular sector is going to pay off in the current year, which it didn't in the last year. So I think that would be the sector that would be positive for the company in this year. And while zinc is a weak spot for the current year, I think the aluminium businesses should do reasonably well, despite a bit of correction. But it's more on a say YOY QOQ basis rather than, you know, on a it's stabilizing. I wouldn't say that it is going to be a big weak spot. Aluminium should be reasonable. So to that extent, I think 34% decline in profits, almost 1/3 or 25% loss in the stock price in the last couple of months. I think more or less factors in the worst case.
What about you, Avinash? What did you make of Vedanta's numbers?
No, I think Darshan, numbers were definitely disappointing, but I think looking at the trend in metal prices, you know, the fall in profitability was more or less anticipated. In fact, the price correction had already factored in the poor numbers. Our sense is that, you know, in the near term, possibly the stock could possibly settle down and not see a significant further damage, considering that, you know, they have given a special dividend of 17 rupees, and you know, net debt on the balance sheet has also come down by about 10 to 12%. So I think all said and done, you know, I would believe that, you know, investors who have it should hold on. I don't think you're going to see a further correction, significant correction from these levels. But yes, the third quarter could also be a challenging quarter. And as Shahina mentioned, you know, crude prices have softened, so one could expect a little more softening on the EBITDA margins from the crude basket also. So I would believe that yes, longer term, you know, the business continues to do well, but in the near term, at best, it could be a market performer.
Okay, that's the view that's coming in on Vedanta. The next stock we want to talk about is Cummins India. Very, very strong set of numbers, both on the domestic front as well as the international front, beating all estimates. But is the rally now over? Because the counter has actually moved more than 15% post the numbers. So our valuations now supporting. Is there more potential upside in Cummins? Avinash, Cummins, what do you make of the numbers and the outlook?
No, I think numbers have been very strong. In fact, compared to the quarter one, the quarter two has been significantly better. Not only in terms of the operational, you know, operational margins, but even in terms of the top line and the profitability. And I think clearly, Darshan, as you rightly mentioned, you know, this is also one of those capital goods companies which is largely driven by infrastructure demand, with a lot of projects coming on the metro side, plus a lot of infra projects lined up. I would believe that Cummins has definitely got a further scope for some sort of further re-rating. Hopefully, you know, the management commentary sounded very positive, and the third and the fourth quarter, our senses could be even much better. So clearly, if one were to look at the next 12 to 15 months, this could definitely now be a good outperformer, considering the fact that you know, management commentary is strong and the margin numbers have actually been significantly better than what the street expected. expected.
Okay, that's the view that's coming in on Cummins. What did you make of Cummins numbers?
I think the numbers were very good. As Avinash said, it really surpassed expectations. And on a 14% growth in revenue, you know, 34% plus type of growth in profits is extremely positive. And this seems to be one sector, one company which is benefiting from higher crude oil prices. So the margins have really been, have done much better on a YOY basis. And in terms of valuation also, I believe despite the stock price having run up, there is still a upside of another say 100 rupees from the current levels. So I would give a target of almost about 850 from current levels. You know, so there is an upside still left despite the performance.
Okay, Avinash, will the higher base effect now impact numbers going ahead for Cummins?
I think partly, Darshan, it would impact, but if you look at the overall, you know, kind of incremental projects which are coming in metro and other infrastructure projects, our sense is that there were a lot of projects which actually had not been, you know, executed, you know, by the governments earlier. Hopefully, you know, the order book size would also increase, and I think now the challenge would be on the execution side. I think looking at the kind of performance in the Q2, our sense is that possibly, you know, the third and the fourth quarter could at best be similar like the Q2, and FY20 should be a lot better. I think clearly from a sectoral perspective, you know, Cummins definitely looks very attractive if one looks the entire capital goods basket. This is one stock which has actually underperformed for a quite long time. So hopefully better numbers, you know, in anticipation of good order book inflow should actually re-rate the stock.
Okay, so that's the view that's coming in on Cummins at this point of time. And the last one is, since we are almost at Diwali and some of the large caps are doing well, we can call it a large cap pick or a Diwali pick, but what's the stock that our guests are indicating? Shahina, any large cap stock that should be bought into this correction?
Well, I'll go with United Spirits. It's celebration time. And I think the company, of course, with a strong parent like Diageo, who is now introducing new products in the Indian market from its own pipeline. So the whole product coverage, like, you know, with 15 brands already, mother brands, they are now adding brands. So I think the overall product coverage is also increasing. Largest, of course, in this segment, and with I believe the consumer demand is only going to increase going forward. Also, I think the difficult times that this sector had in the last maybe 1.5 years is now more or less stable. It's behind us, and the strategy that the parent is putting in to increase sales is going to start playing into the numbers, which we already saw in the quarter numbers that were out last couple of days. So while I have already recommended the stock sometime earlier, even at current levels, I would be adding this stock. I believe there is, while valuation is not cheap, based on the EBITDA over the next 2 to 3 years, I think it's still attractive.
What did you make of the results that came out?
Very good numbers. I think a 15% type of growth. It was very good numbers. It was better than expectation. And it's starting to show that the strategy that the management is putting in place is having a positive impact both on the EBITDA margins as well as on the top line. So, and also in terms of balance sheet quality over a period of time, I think there is a potential to improve. So, betting on the parent, betting on the brands, and the consumer demand, these three are...
And valuation wise, you think it's expensive, but it's fine?
It's expensive, but then, you know, if you look at HUL, you look at most of the large cap stocks which have good brands, have good brand recalls. There the valuations are expensive, and they've still multiplied and given you those type of returns. You look at any of these large companies, in the last 3 years they've more or less doubled. So I see potential despite it being slightly on the expensive side. I still see potential.
Okay, so that's United Spirits, the first stock that's been spoken about. Avinash, before I get to your pick, any word on United Spirits? What did you make of the numbers?
I think numbers have been very strong. In fact, you know, the liquor space has seen a lot of traction. In fact, other companies like Radico Khaitan also posted a very good set of numbers. And as Shahina mentioned, I think, you know, they have a very large product basket. I would believe that, you know, looking at the kind of product basket and the consumption theme, you know, which markets have actually generally liked over a period of time, this could be a good outperformer over the next, say, 12 to 18 months. I would believe that, you know, these are stocks which should be accumulated, Darshan, on every dip. Clearly, these are portfolio stocks, and maybe, you know, apart from the fact that they are, you know, or even momentum driven, the business definitely looks quite strong over the next 12 to 18 months.
Okay, and which is a stock that you believe could be accumulated at these levels?
In fact, Darshan, we have been recommending our clients to buy into Reliance Industries. We believe that, despite the fact that Q2 was not a very great quarter, large amount of GRM, dip was because of the plant shutdown. And I think clearly on the retail side, on the Geo business side, we have been seeing decent amount of growth, good positive surprises coming in. And on the Geo side, despite the fact that ARPUs were down, subscriber additions were extremely strong. And they have already initiated a petcoke gasification unit at Jamnagar. Now once this gets implemented, which is hopefully going to happen over the next 12 months, we could see an improvement in the overall GRM. So I would believe that use the current weakness to buy into the stock. Over the next 12 months, we feel that we could see a decent upside. I think on FY20 the stock traded around 13 times, which is not very expensive, and I think we could definitely expect a better second half from Reliance.
Okay, that's the way. And before we end, Shahina, you have any word on Reliance?
I think I had a neutral for some time because of the expectation that GRMs would be impacted. So it's sort of evolved like that. But if one is to be in large caps and one is seeing a 2 to 3 year, holding period, I think Reliance could be a good bet to be in. So it could be one portfolio stock that you are in, because at some point there will be value unlocking. There's so many diverse businesses. You have retail, which is turning around. You have Geo, as Avinash said, is doing pretty well now. Number of subscribers is pretty strong. It's like turned into green. And also you have the core business, which is not doing that well as of now. I mean, they were impacted, but I think it should pick up as stabilization comes in crude oil. So it's a good stock to be in.
Okay, United Spirits and Reliance are the two stocks that have been spoken about by our guest as far as their large cap picks are concerned. But with that, we timed out on this edition of the show. It's a wrap on this edition of Hot Money. Shahina, thank you so much for coming in. Avinash, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg.